What's happening in real estate today? Well, let's take a look. I'm Justin Miller with the Chong Miller Group, and this is the October 2020 Residential Real Estate Market Update, where we look at the statistics from last month, from September 2020, for residential, resale, single-family homes in the Las Vegas Valley. Let's go ahead and dive right in. Now this month, I'm going to start with the pricing number. The pricing number is interesting. As I had indicated in the past couple of months, and as I had suggested at the beginning of the year, based on what already looked like low inventory and absolutely looked like low interest rates, we're seeing significant increasing price pressure. Now, what does that look like right now? We ended September 2020 residential resale single-family homes at $334,950. That's up 1.5% from $330,000 where we ended August of 2020, and it is up 9.1% from the $307,000 that we had ended September 2019. So we are now up more than 9% year over year in pricing. Very much in line with what I had been suggesting. And this is a natural result of very low, in fact, historically low interest rates, which impact the amount that people can pay for a home or the amount of home that people can get for some particular number of dollars. This also, however, is being influenced by low inventory in the market. And so the tight inventory is causing some challenge in the sense of multiple offers on properties and perhaps quicker sales on some properties than we might otherwise expect. I'll get more into inventory in just a minute. But first, let me also address how many homes actually sold last month. Now, I had actually predicted sales in September were going to go down slightly from where we were in August, because the market has been so hot. In fact, sales increased. Sales increased to 3,071 closed single-family residential resales in the Las Vegas Valley. That's up actually 12.9% from 2,721 that had closed in August. It's actually on par with what we had closed in July, which was an extremely strong month. July was 3,077, so we're down 6 from that. And that's as of today, as of collecting data on the 5th of October. So this number could potentially go up by another 1 or 2, but it looks like we're going to be just below where we were at the end of July of 2020. This is a very, very strong number. This is up 18.8% from what we had closed in September of 2019, 2,586 home sales that month. Remember, that's a pre-pandemic month. That was a perfectly fine functioning month at the end of the summer last year. We're up 18.8% in closed transactions from that time. Now, I want to comment that the 3,077, and again, we're at that basic level, 3,071, that's actually the best September that we've had since 2011. So what about inventory? I've said inventory is tight. I've been saying that for the last, well, pretty much the entire year, especially after the coronavirus pandemic. Well, let's look at inventory. So we ended September 2020 with 2.0 months worth of inventory. That's down 13% from the 2.3 months that we had ended August at. It's down 44% from the 3.6 months that we had ended September of 2019 with. We have really tight inventory. I cannot stress this enough. In fact, at 2.0 months, inventory has been below this only 2 months, unless we look all the way back to February of 2007. where we were clearly going into a housing crisis precipitated by a financial crisis in the Valley at that time. What about number of homes for sale, right? The alternative way of looking at inventory. So we had 5,119 homes available for sale at the end of September. That's down 10.6% from the 5,723 homes that were available for sale at the end of August, and it's down 44% from the 9,155 homes that were for sale at the end of September last year. This is actually the lowest number of homes for sale across the entire Las Vegas Valley, going all the way back to June of 2008. More than 12 years ago, before we see inventory levels at this number. And remember, at that time, because there were fewer residents and fewer houses in the valley, that was a larger proportion of the overall housing mix that existed. This is really low. I don't want to say it's historically low, but if we put it into the context of the population that lives here in Las Vegas, in the Las Vegas Valley, it is actually historically low housing for sale at this time, matched with historically low interest rates, literally historically low interest rates. So there's a couple of other numbers that I want to look at. One is new homes coming into the market. In September, there were 3,773 new single-family resale listings. That's down from what we saw coming into the market during August, where that number had been 3,861. We're actually down 2.3% in terms of new inventory coming into the market. We're up from where we were at the end of September last year, up by 8.3% from 3,484. Now, I do want to caution, September through December usually see declining numbers of homes coming into the market for sale as we go through a regular seasonal slowdown. So September 2020, a little bit stronger than what we saw last year in terms of increasing inventory, but we're already starting to see what appears to be an echo of that seasonal pattern where we get decreasing numbers of houses listed through what some people refer in the Midwest to as the Burr months, the September through December timeframe. Now, for the last couple of months, I've looked at pending home sales as well. That's number of contracts that exist on houses for sale. Contracts meaning a purchaser has come along, made an offer, seller and buyer have negotiated and entered into a sales contract. That sales contract is not yet closed, hence it's a pending sale. That sales contract will either close in the future or it will collapse. Some number of sales contracts do collapse for reasons such as bad inspections or bad appraisals or lack of willingness to negotiate around issues coming out of appraisals or inspections. Sometimes they collapse because banks pull back or because maybe a buyer loses their job while they're going through the purchase process and they no longer qualify for the loan. Sometimes they collapse just because buyer gets cold feet or the seller decides they've lost an opportunity that they were going to go into on a different property and they just decide to cancel the contract. So pending home sales, however, though, gives us a strong indication of what's going on in the market as we speak. So pending home sales at the end of September 2020 were 3,402. That's up 7.2% from the already incredibly strong 3,174 at the end of August. It's up 32.5% from the end of September 2019, the pre-pandemic month 1 year ago. That number compares to total closed sales in the month of September of 3,071. We're actually 331 more contracts that were existing at the end of the month than had closed during the course of September. That's a really, really, really strong number. In fact, that's the highest pending home sales going all the way back to March 2012. And as I mentioned last month in my market update, when we think about 2012, that's as the country and Las Vegas was coming out of the financial crisis, and we started seeing a lot of purchases by large companies that wanted to create inventory for themselves to become mass landlords. We also saw a lot of individual investors coming in and buying up property at that time. And so we saw a lot of contracts being written. Some of those contracts were certainly closing. Some of those contracts may very well have been pending at the end of the month. And so we see actually a spike, if we look back at 2012, a spike in pending home sales at the end of each one of the months through the first and second quarter of the year. So we've got pending home sales that are higher than anything we've seen since that point in time. And we're seeing that on inventory that was much lower than what existed at that time. Because remember, inventory numbers, we're looking all the way back to 2008 to see comparable inventory numbers. So we have an astoundingly tight environment right now. Now this is pushing prices higher. As we saw on the top line number, the median sales price, it's also pushing prices higher on the square footage, the price per foot. And so right now, we've ended September with a median price per foot of $179. That's up 1.3% from $177 at the end of August. It's up 7.2% from where we were last year at $167 per foot. Pricing is strong. There's just no way that we can get around that. Now, I do want to caution you, if you've been watching this series for a while, you know I had been talking about the inflation-adjusted value for median home price, where we had previously topped in, I believe it was June of 2006, at $314,000. On a nominal basis, we're $20,000 higher than that right now, but on an inflation-adjusted basis, that number is still about $410,000. And so we're still about $70,000, $75,000 below that number when we adjust for inflation. So housing prices, very strong, nominally, historically high in the Las Vegas Valley, but on an inflation-adjusted basis, there's lots of room to run, where we're not running into the same kinds of affordability issues that we ran into back in the 2005-2006 timeframe. Now, there's one other number I want to mention, just because it's kind of interesting, and then I want to go on and talk generally about the environment that we're seeing ourselves in, and talk a little bit about what I see unfolding over the remainder of this year, over the remainder of 2020. So this one additional number I want to mention is the total volume in transactions of single-family resale residential real estate in the Las Vegas Valley last month. We did a total, not me, the Valley's real estate market did a total of $1.23 billion last month. That's a record high, right? Now that's a combination of number of units sold as well as the dollar value on those units. This market is just, it's burning it up. These numbers are record numbers. Record number in terms of total value of the marketplace, record lows in terms of interest rates, effectively record lows in terms of inventory in the marketplace, and incredible highs in terms of the actual number of units that have sold and the number of units that have gone into contract and are sitting as pending contracts at the end of September. So what I'd like to do now is I'd like to look a little bit into the future and make a forecast. As you know from watching these series of videos, I tend to like to make a forecast about what's going to happen in the month during which I've recorded the video. So for example, right now, what's going to happen during the course of the month of October. Because we're actually sitting at the beginning of the fourth quarter of 2020, I want to look a little bit further out. In fact, I want to look a little bit further out in the short term. I also want to look a little bit further out in the long term. So what do I see in the short term? Because of very low interest rates, because of incredibly tight inventory, and because of the way the economy is starting to reopen, reemerge, I'm seeing continued pricing pressure. I know there are prognosticators out there who are saying that, hey, people are going to start losing their rental housing. They're going to be evicted. And then that's going to impact the market where landlords are going to start losing their properties through foreclosures. As I've said before, I don't see things unfolding in quite that manner. What I see is mortgage forbearance programs that may be extended, but at least right now give people 12 months. I see that as an opportunity for owners of their own properties, as well as owners of income properties, to be able to exit what might be distressed sales in a more orderly process. I don't see a massive foreclosure wave coming. I also don't see a massive eviction wave coming just because of the practicalities for individual landlords to get rid of tenants, even once it becomes legally permissible to evict tenants. It means that you're, as a landlord, permanently giving up on the ability to collect any of the rents that were owed. It also means that you go back into the rental pool looking for tenants who may be absolutely no better qualified. I think that for the majority of landlords and for the majority of tenants, there's going to be a workout process that keeps people, generally speaking, in their homes. That does, however, suggest in total that we will see additional inventory coming into the market, but probably not until after the new year. I think inventory is going to continue to be very constrained between now and the end of the year, where we normally see seasonally inventory decreasing every month from September through December. So I don't see the inventory situation improving. Obviously, some houses will be listed. There will be houses that will sell. Prices will be pushed higher and higher. Well, what about number of sales? I don't think the market is actually sitting in a sustainable position at this minute. I think there will be people who want to buy. I think that will continue to be the case. I think there will be people who have capacity to be able to buy. I think that will continue to be the case. I think there will be sellers who would like to sell, and that will continue to be the case. But we don't have enough inventory right now to be able to actually accommodate all of the people who want to be buying property. We're going through the inventory that we have in the marketplace very quickly. And so I think total home sales are actually going to start dropping. I don't believe the home sales numbers right now are sustainable. Now, I will caution you, I make that comment with a couple of caveats, with a couple of footnotes. Normally when we look at the future, we look at an environment with some level of uncertainty. Right? We can talk about there's risk in whatever's going on right now in the present. We can talk about uncertainty as it relates to the future. We don't necessarily know how the future is going to unfold. Why? Because it's uncertain. Right now, though, we've got the coronavirus pandemic. We have flu season just about to start up. We don't know if it's going to be a strong flu season or a mild flu season. We don't know, but we do know that mild COVID-19 symptoms are very similar to flu symptoms, and it means that if people get the flu, there's going to be a lack of knowledge among those people as to whether or not those people have COVID-19 or they have the flu. And that's likely to slow some level of the interactions that those people engage in. As well, if you're dealing with somebody who's coughing and sneezing or running a fever, You don't know, do they have just a flu or do they have COVID-19? And so it's likely that people start to pull back during flu season. Now as well, we have an election season right now, a very incredibly contested election season, and that's starting to bear down on us right now. We're about a month out from Election Day. We don't know if we're going to have results at the conclusion of Election Day or if we're going to have to wait several weeks after that. We also have, obviously, a lot of economic dislocation still existing in the environment. These four issues, superimposed on each other, lead not only to uncertainty, they lead to what could be described as confusion. If you will, the pieces on the game board are subject to moving in ways they're not supposed to move right now. That confusion is likely to slow the activity in the marketplace beyond what we would see with normal seasonality and even beyond what we might see with the lack of inventory that exists in the marketplace right now. It could be that buyers become a little bit more hesitant through the end of the year. It could be that sellers become a little bit more hesitant through the end of the year. Now, I'm not making a firm prediction in this regard. What I'm saying is the environment's becoming confused. I think the confusion lifts once we get past about the middle of January. And what we're going to see then is a more orderly market reemerging. So there will be a vaccine for the coronavirus. I don't know when that's going to be widely available. Obviously, as that becomes widely available, things start to open up more freely, and regular economic activity starts to reemerge. There will be a lessening of the flu season once we get through the middle of February. Hopefully the pandemic will let up with the advent of a vaccine and with nicer temperatures emerging that allow people to go outside, and et cetera, et cetera. And the election uncertainty will be entirely behind us. And so I think that once we clear the middle of January and middle of February, things become more understandable, and we just go into uncertainty as opposed to confusion. So in the short term, I believe that the confusion is likely to slow sales while not dropping prices. Rather, prices will still continue to stay strong and probably increase given the incredibly low inventory and interest rates. And I think once we get through the end of the year into the first month, or certainly through the first month of 2021, we're going to start to see more activity and again, increasing pricing pressures next year. The Federal Reserve has already declared they intend to keep interest rates where they are through at least 2023. So interest rates are not going to be going up. They may fluctuate some, but they're not going up. So interest rate impacts are going to continue to exist in the environment. That's pushing prices higher, irrespective of everything else in the marketplace. Inventory is constrained, likely to remain constrained for at least the next 6 to 9 months. That will continue to push prices higher as well. And as we get through the confusion period, sales activity, number of transactions will increase as well. So what are my more specific insights then for you at this time? If you're a seller, you have something of real value. Now, you may not have it marketed well. You may not have it presenting well. You may not have somebody who's really good at helping you figure out what the value of that asset is that you have and how to capture the value of that asset. You need somebody who can help you through these confused times, because that's really what we're entering into right now. Anyone who's making solid predictions right now as to what's happening between now and the end of the year, they're just making it up, right? I mean, there's always uncertainty about the future, but the confusion is making things much less clear. If you're a buyer, if you've got the means, absolutely. If you can find the inventory that you want, you can get into a great property. And for less dollars today than you'll be able to once we get to February or March or April or May into next year, because prices will continue to go up. You've got great interest rates in the environment. You can afford to capture a better property perhaps than what you otherwise would have been able to capture. So if you're a buyer, don't be deterred, but do be aware inventory is really tight. It may take a while to find what you're looking for. Hire an agent who understands that buying, or rather the buying process, is an investment in the client agent relationship and is going to continue to work with you through the tight inventory situations to keep looking for exactly what it is that meets your wants and your needs. So I hope to be able to put out an Ask the Professor video a little bit later in October discussing why we're seeing such strength in the buyer pool right now. The economy is, on the one hand, very problematic. On the other hand, we actually see tremendous strength in the buyer pool. And I think there's some real reasons for that. And I want to be able to go into that. And I'll do that in another video. But on this series, on the Market Update series, I'll see you next month. Stay safe out there. Stay strong. And whatever you do, make sure that you're trying to engage in ways that are safe and productive in the environment. That means go vote. That means make sure your voice is heard. That means make sure you're staying safe at the same time. I'll see you in a month.